Good morning, everyone. This is David Millington, the Director of Procurement Education at Next Level Purchasing Association. And today's informational webinar is going to be on finance for procurement and finance for procurement professionals. I understand that my audio is coming through clearly. If there are any issues, just send me a message in the chat box and I'll deeply appreciate that. So our webinar should be about 30 minutes or so. Towards the end, I'm going to leave the floor open for some Q&A. If you have any questions, please send them in the chat box and I'll respond to them in the order in which they're received. So, some house cleaning. We're going to cover several areas concerning finance for procurement and the importance of procurement professionals having a very, very good grasp of the critical aspects of finance. So I'm going to go to the next slide. Okay, so there are many benefits of understanding finance or having a strong understanding of the parameters of finance and how they relate to procurement and the supply chain function. One of them is that a good grasp of the parameters of finance would help one or help you as a supply chain or procurement professional decrease your company's total cost of ownership. And our course, it's a two-part course. There's finance for procurement, for strategic procurement 1 and finance for strategic procurement 2. So we had to split the body of knowledge into two courses or two levels because it's just that robust, and we figured it would lend itself to a better learning experience that way. Also, the course focuses heavily on how you as procurement professionals could increase your company's return on investment in the procurement function. Procurement or purchasing in many organizations, the procurement function or the procurement department or the purchasing department, they're viewed as cost centers. They're the folks that spend money, and often what happens is that I think that from my experience, procurement professionals don't get the degree of respect that they deserve. Because of this, they don't bring money in, or they don't contribute to the company's bottom line. So they're seen as a necessary burden and a cost center. And this our course, the Next Level Purchasing Strategic Finance course, would help you to sit or to be able to sit at the table, sit with those senior decision makers, sit with the people in finance, CFOs, vice presidents of finance, directors of finance, and collaborate with them on how the procurement function and you as procurement professionals could add value to the company's bottom line. And the course goes deep into those parameters and those benefits. You'll also enable, the course focuses heavily on how you can enable your organization to realize its strategic objectives and its strategic financial viability objectives. Also, you would learn how to understand and leverage procurement KPIs, key performance indicators, and you would learn how to think like a CFO, or you learn how they think, and you'll be able to communicate with them using the language. You'll be equipped with the necessary tools the necessary formulas and the capability to build matrices and to leverage the necessary financial ratios. And again, you could sit at that table where strategic decisions are made and how you as procurement professionals uh, um, leveraging the procurement mandate enable your department and the people that work for you as procurement professionals add to the company's bottom line. And of course, I strongly believe that, and this was my experience, and more so after I did my SPSM 3 and I had to do the finance for procurement courses. It really helped me increase my net worth in terms of the cost savings, the cost avoidance, the type of innovation that I was able to bring to bear as a procurement professional in my organization. It really helped increase my net worth. It was as simple as that. And on to the next slide. So the course is going to go very, very deep into, I would say, three critical financial statements: the income statement, the balance sheet, and the cash flow statement. And income statements, another word for the income statement is profit and loss. And the course goes deep into those calculations. You would have many exercises where you would have to analyze the top line or the revenue streams and the magnitude of the revenues. I understand there's no sound. Could you hear me? If you can't hear me, could someone, Abdullah sent me a message that he couldn't hear me. Is that the case? Oh, you can hear me? You can hear me, Melissa? Okay, so then I guess there's some issue, Abdullah, on your end. Oh, thank you, Jim. Oh, thank you, Natalie. Okay, great. Okay, so one of the things about that I'm very, very excited about my experience as ISPSM 3 and the Director of Education of Next Level Purchasing Association is that I've been a practitioner in the space in procurement and supply chain operations. I have over 20 years experience, and the experience that I had going through all the levels of the SPSM program, and this one in particular, to me, it puts everything into perspective, because organizations exist to make money and to make profits, to bring a return on investment to their shareholders. Organizations exist to create and generate some type of value, and that value is exchanged for something of a greater value in terms of economic profit and profitability. So the better procurement professionals understand the parameters and understand that all the activities, all of the key metrics and the KPIs associated with procurement activity and the impact that the procurement function has on organizations and the supply chain as a whole, the better you understand that it comes down to in many cases these three statements here, and how your activities would impact these three statements. So the course gives again an in-depth understanding of how to do a total analysis of, I would say, in-depth and advanced income statement analysis, and you're going to have some very robust exercises in there where you would calculate the revenue streams and the cash inflows and the cost of goods sold and the cash outflows, and determine what the the bottom line is, or the net profit. Also, you're going to go, the course goes deep into balance sheet analysis and the exercises that will be covered, uh, in which, you know, you would understand the assets and the liabilities and the owner equity dimensions of a balance sheet, and how your activities as procurement professionals impact these statements and impact the the balance sheet dynamics. Also, you're going to the course will provide an in-depth understanding, a very robust understanding and exercises and calculations on the cash flow statement. I'm sure many of you have heard that cash is king, and this is the reality in business and supply chain operations. Cash is king. Cash rules. How for procurement professionals to have a very good understanding of cash flow dynamics and how the activities and the performance of the suppliers that you as procurement professionals select, and how you as procurement professionals manage those suppliers. Because the reality is that if your suppliers are not performing effectively, if every time your suppliers bring or provide you with defective inputs, and they're late deliveries, and every time that they short or deliveries outside of the quantities that you ordered, if they send you less than you requested, that could cause disruption to the upstream production processes, because they wouldn't have the necessary materials on hand to meet the customer demand and the customer requirements, and you could have loss of sale. Also, if you have too much, they ship too much, then you're going to have inventory carrying cost, and you could put undue stress on your storage grids, and products get misplaced and damaged. So too much inventory is not good, and being short is not good either. And all of these activities, and in the procurement function is responsible for, are going to show up on the cash flow statement. So the cash flow statement, again, it lists, you're going to go deeply into an analysis of the inflows of cash into your organization's monetary platform and for fiscal platform, fiscal system, and the outflows, how cash is used in your system, including your purchases as supply chain professionals. So the course is very robust, and in my opinion, as also spending many years in the field as director of operations and had to be on top of this cash flow statement or cash flow analysis, I would say that I've been very pleased with the way the next level purchasing finance for strategic procurement has been designed. It really gave me a more profound and deeper understanding and capability on how to analyze and leverage cash flow statements, and to help the finance departments that I had to interact over the years with, the different departments in different companies. I was able to, by a very good understanding of cash flow analysis that was given to me via this course, it really helped me to add value and provide a very profound positive impact on my organizations. And move on to the next slide. Just forgive me, so that'll, there we go. Okay, so I would say that the finance for strategic procurement, the both courses, it would provide you with a very good impact or understanding of the parameters that you see on the screen here. and how procurement and how to measure procurement's contribution to financial performance, and how you should how you should go about analyzing and dissecting those parameters. And this is what you call SIPOC analysis: suppliers, input, process, output, customers. Actually, okay. I would say that the course, myself being a Lean Six Sigma practitioner, this is one of the critical tools that we use in the field in business process improvement, and I could spot this in bodies of knowledge very easily. And I would say that the designer of the course did a very good job at pinpointing how to strategically view financial parameters in based on systems thinking. And if you think about it, your organizations or the organizations that you support as procurement professionals are made up of what? What are the key dynamics or parameters of a supply chain? They're made up of suppliers who provide inputs to processes or conversion processes that conversion of the raw materials from the suppliers, and I'm saying it a different way, are made into, or that those activities create outputs, and those outputs are the outputs that are utilized by the end user or the customer or the customers. So SIPOC, suppliers, input, process, output. Sorry, suppliers, input, process, output, customers. And if you want to understand any system or how to optimize any system, I strongly recommend you list your suppliers, make a matrix, and set certain criteria that you expect from your suppliers, and rank them or rate them, scorecard them. And then look at the inputs, analyze all of the inputs that go through your activities as procurement professionals, be it your technology, be it the materials themselves, being the tools that you use to execute your functions. Analyze those. And then in the procurement process itself, analyze the process, how the steps, how long it takes to execute each step. And you'll realize that those parameters that I just mentioned, all of them have financial impact. And the course does a great job at going into these parameters. And then the outputs. Do the outputs meet customer requirements? And the bottom line, the entire SIPOC dimension that I mentioned, suppliers, input, process, output, customers, they're going to have impact and affect one of the most fundamental and critical and essential and vital. If I had more words, I will say it. The key metric for procurement professionals, the total cost of ownership. So the course has been designed to give procurement professionals and supply chain practitioners a very robust understanding of I would say, the reason for their existence. And that is to ensure that there's the lowest total cost of ownership. What is total cost of ownership? We're pressed for time. This could be a long talk, but I'm going to give the short form of it. Total cost of ownership, and how this affects an organization's bottom line, and how it affects how the procurement function is viewed, and how, if this key metric is leveraged effectively, you as procurement professionals would be heroes and heroines in your companies and your organizations. So the total cost of ownership. If you're producing pens, the price of the raw materials would be part of of the total cost of ownership. And then, so if you get a very good price, I'm very happy with you, and I'm sure your boss will be too. However, if you have suppliers who have a high defect rate, and every shipment comes in with let's say a 10 or 15% defect rate, that defect rate is going to be has to be added to the price. So let's say you have a price point of let's say 50 cents for raw material cost, and then you have defects, and then you have to handle those defects. You have to count the defects. You have to segregate them. Your organization has to segregate them. Your organization has to go through the reverse logistics process. Each one of those stages have cost. So let's say the cost of those activities that I mentioned, defects were shipped by your customer. Your receiving team has to sort those defects, return them, document them. You as a procurement professional has to get on the line with your supplier. What is this? Why are you shipping me these defects? When you add in all of those costs, that could add a staggering amount on the total cost of ownership. Now, let's say a supplier ships a delivery that is late. Delivery is late. And you have, let's say, your production, your manufacturing plant. I worked in a bakery for 12 years, and we had 300 people in the plant. And I recall one of my shipments coming in late. And to add insult to injury, I was short-shipped. So I had 120 people on the production line waiting for raw materials. Now, picture a bakery without flour because my shipment was in late. Now, picture the overtime cost. So you have to add that to the cost per unit. So you have defects, you have late deliveries, you have deliveries that are short-shipped. You add up all of those costs, and now you get the total cost of ownership. So if you really understand this and you could control these cost parameters, and we could articulate them eloquently to our financial officers or vice presidents or directors of finance, and we could assist them in making key decisions by being able to understand their language, you would be in a much better position and add value to your organization. And this course, it does it. Believe me, it does it. It really equips you well with what you need to know to make those decisions and how to analyze your organization holistically from a systems thinking perspective. Again, the suppliers, who are your suppliers? Are they reliable? Are they responsible? Are they capable? Are they aligned to your organization's strategic posture or your organization's strategic objectives? If they are, then you have a low total cost of ownership. Having a low total cost of ownership means that your organization would be stronger financially. And if they give you the inputs, the right price points, the right quality all of the time, and they send you your deliveries on time at the right quantities, then meeting the specifications, and your suppliers, you're able to collaborate with your suppliers and how to reduce costs in the supply chain, upstream and downstream processes. Maybe you have some suppliers who could even lend some of their technology and some of their intellectual property to your production processes. So there are many ways that procurement could add value. You choose the right suppliers, you collaborate with them, you choose suppliers that could add more bring more to the table outside of high quality products. They could bring intellectual property and innovation. This is another way you could unlock their capabilities, and you could unlock and reduce costs in the supply chain. And the course does very well at focusing on those parameters. And we're going to move on here. So we see here measuring procurement's contribution again. So we spoke about the total cost of ownership. The course does very well at equipping you with those toolkits and those understandings. Understand the cost of poor quality. If you choose the suppliers that are not responsive, that they have a high defect rate, and they're just not capable, they're going to increase what you call the cost of poor quality. And you should do some, I recommend that you all do some research on the cost of poor quality and really understand that key metric and understand how you could avoid it. Cost of poor quality impacts, because they could be staggering. And the course goes deep into cash flow positions, unfavorable cash flow positions, or favorable cash flow positions. If you go through the negotiation course, it goes deep into negotiating everything in a product or service spectrum, including the terms. Because the bottom line is, if the organization is shipping out products and collecting payments net 60, and your suppliers expect you to pay net 15, there'll be if you, depending on how much cash you have on hand, there will be a time where, because you have a stronger outflow of cash and a weaker inflow of cash, you will go into unfavorable cash flow position. And the course does very well, a good job at really going deep into those parameters. And if you're able to at least make a balance, right? You don't want to stress your suppliers out by you collecting your payments net 15 and then stringing them out net 90 or net 60. What that does, it would weaken your supplier. And the course does focus on those parameters. Once you weaken a supplier, eventually it's going to come full circle and you weaken your own fiscal position. All right, because they're going to cut costs, and by cutting costs, they may cut corners, and it usually shows up in, look at your cost of poor quality. Look at the defect rate. You'll see them escalate, and they try to cut corners and use cheaper materials, and that in the long run is not going to yield a good return on investment or doing business with that supplier. It could be something that we as procurement professionals do by our own hands, because we strike that imbalance. So the course again does a very good job at articulating in a very robust way favorable and unfavorable cash flow positions. And the course does a dynamic job, a fantastic, an extraordinary job at articulating, in a very robust manner, how procurement professionals have to list their cost savings. Because a lot of CFOs, especially guys who've been to business school, girls who have been to, ladies who have been to business school, they understand, the MBA programs or DBA programs are very, very, have a high emphasis on finance. And you don't want to be in a situation where you list your year-near cost savings at a certain level, and the numbers just don't match. You don't want to be in that situation. So the course does a very good job at equipping you with all that you need to know not to be in that type of hot seat. The course also goes deep into lease or buy decisions on how to do those calculations and to make those decisions. Once you get into situations where you also repair or replace decisions, once you get into situations where you're not buying a $50 or $200 item, you're buying an item, a piece of equipment that could be hundreds of thousands of purchase equipment into the millions, to effectively sit and with the CFOs and the vice presidents of procurement, and to help them effectively make those decisions it put U.S. procurement professionals in a favorable situation where you could really bring value and to the bottom line. Very, very important, lease or buy or repair, replace decisions. And it goes into deep into the different um, um, budgeting dynamics uh, and budget reports and the cash budget and obligation of budgeted amounts and costing and cost of goods sold budgets. The cost goes deep into those parameters. We're getting a little bit pressed for time. Uh, um, the course also goes into inventory and how to calculate inventory as they reach different stages in in the value stream, be there raw materials, uh, and then raw materials convert into work in progress, and then work in progress converted into to finish to finished goods. It does a good um, job at calculating all of those costs, and then the activity-based accounting mechanisms, how you allocate your overhead and labor hours. So this way you could look at the total cost of ownership. The course does, or the courses does do a great job at articulating those parameters. And uh, it does an extraordinary job into ratio analysis. You understand all many of the key parameters, financial parameters and financial metrics, how to do the calculations, and how understanding of these parameters would make you as procurement professionals more effective at what you do. And one of them is I highlighted it at the bottom there. You see the Altman Z score, very, very robust metric. There are two methods of calculating that score for publicly held organizations and for privately held organizations. And that Altman Z score effectively articulates and displays the financial viability of an organization and if or when they would go out of business, if you detect that they're having some type of issue. Very, very robust. And the courses do a great job, and I recommend that you audit every supplier. You let them know that they want to sign a contract, they want to do business with you, that you're gonna be visible with them and let them know what your situations are or what your situation is, and you need that level, that degree of a high degree of visibility with them. So this way, it's a true partnership, and how you would go about analyzing just the income statements and the balance sheet and the cash flow statements and mechanisms of your suppliers. The better that you understand this, you would be more equipped to make effective supplier selection decisions. And we know that if you, again, the bottom line is if you have effective suppliers who can provide you high quality inputs, raw materials, delivered at the right price point, delivered on time, all the time. They have a very, very high degree of consistency in those parameters. Then, and then you get those inputs delivered to your conversion processes. Then you, as procurement professionals, have done your part of the job. You have in that case, you would have positively impacted the segment of the value stream that you are responsible for. So the course does a very good job at equipping you with all the tools and metrics that you would need to effectively execute those functions. And I'm going to end with this, and you could go into some Q&A. always remember the mandate of the procurement function, and that is, I'm going to remind you, and the reminder is great. It's always good as professionals. It's always good to be remind each other of the reason why we're here. The procurement mandate, or the purpose of the procurement function. Please never lose sight of that. The procurement function is there to manage spend, and this course does a great job at helping you to manage spend. The procurement function is also there to protect your organizations from risk, and thirdly, to support operations. And each one of those parameters, protecting the organization from risk, supporting operations, managing and reducing spend, each one of those parameters of the procurement mandate have financial impact. The word finance resonates through those three dimensions. And this course does a great job at equipping you to do just that. So does anyone have any questions? You can do some quick Q&A. I went a little bit over time. If you do have any questions, if you could, please just send me a message in the chat box, and I'll answer them in the order that they are received. Also, for those of you who are thinking about taking the course or thinking about getting the SPSM 3 level, or you just going to take the course, I'm personally I love to teach, and I have a passion for seeing others succeed at what they do. And you would have access, I pretty much have open access, and you feel free if you need any type of support, shoot me an email, and I'm there for you. I'm very, very passionate about this, and at Next Level, that's why we are here, to see you succeed and to see you be better at what you do. Yes, I see I have a question there on... Oh, I don't see it. I do not see it. I think it's something on Altman's Z-score. It just flashed, and somehow I lost it. Yeah, I'm not seeing that question. It just flashed there, but I don't see it anymore. Okay, so the Altman Z-score, it's a metric of the viability of a particular supplier. Okay, you could do an Altman Z-score on, again, publicly held organizations, and for privately held organizations. And this looks at the organizations from different parameters and the degree of risk, the degree of positive or negative liability that organizations have, and their cash flow position, if they're about to go into the red. And it uses analysis on how soon that would happen. So what that does, it would enable you as procurement professionals to see the red flags before you get yourselves involved in any type of contractual agreement, or selecting a supplier that has a negative Altman Z-score. You don't want to do that. So it's part of it should be used as part of your risk management mechanism, and it should be used part of your supplier auditing mechanism. And uh, the risk management and the audit mechanisms should be done on a regular basis. Even if you have suppliers that are currently performing, they're high performers, things happen, right? You could have companies that are doing well, and 2 years out, the situation changes. And I advise you as procurement professionals to think holistically and to think systems thinking. Uh, your organization is made up of, of system, right? Process, people, technology, inputs, outputs, and the same with your suppliers. Your suppliers also have suppliers to their processes. They also have, in some cases, conversion processes. So there could be things in their sphere that you're not aware of that could be negative and erode their profitability over time. And to be able to detect that on a regular basis is very, very important. So a critical part of what you would have to do as procurement professionals is to audit and let them know that's part of getting the business, and it's going to be part of maintaining the business, that you do regular audits twice a year, once a year, quarterly. I would do 2 audits. I used to do 2 audits a year, in-depth audits, leveraging, the income statement analysis, the balance sheet analysis, the cash flow statements, and the ultimate Z-score uh, twice a year. And then I would have snapshots quarterly. So this way I understood, had a good understanding of how my suppliers were financial, and there were situations where we helped each other improve our processes across the value streams. So my suppliers would help me improve my processes, and I'll go upstream and help them improve some of their processes. I've done this to have that total look on how to decrease and look for opportunities in the supply chain outside of beating up suppliers on price. As procurement professionals, this is why we are procurement professionals. We don't just go and beat up suppliers on price. There are many parameters, many parameters outside of price that are opportunities that that we could leverage to reduce cost in a win-win, how should I put it, environment. Just simply by strong collaboration, making that culture where there's strong collaboration and visibility, right, across the supply chain. Companies that are best at collaborating with their suppliers are best able to find financial viability and market share and success and competitive advantage. The companies that are best able to collaborate. So think systems thinking. And if anybody wants to shoot me a note or an email, they need more in-depth understanding on systems thinking, I could help you with that. Just shoot me an email and how it applies to your function, and how this course could help you leverage systems thinking, and how critical finance is. And I'm going to leave you all with 2 caveats. For those of you who understand balanced scorecards, and how to leverage that in the procurement function, in your organizations, continue doing it. And for those of you who this is new to you, you're not using balanced scorecard, you're not leveraging it, your organization, they're not leveraging that, shoot me an email. We could have a discussion. This is why we're here. Balanced scorecard. So the old adage, what gets measured, gets managed, gets done. You don't manage it unless you measure it. So our critical part of business measurement is finance. But if you take finance and you put it up in one quadrant, you have three other quadrants that you need to focus on as an organization and that U.S. procurement professionals could positively impact. Another critical dimension outside of finance is employee satisfaction and employee capability and employee skill level. Another critical parameter is process and quality. Another critical parameter that should be measured is customer experience and customer satisfaction. So I'm going to go through this caveat really quick. If you select as procurement professionals, if you select the right suppliers who could deliver the right inputs on time to your conversion process or your manufacturing processes, and your organization has a robust manufacturing capability, then the products and the services that are going to be an output, you remember the site buck, right, are going to be of high quality and they're going to yield high customer satisfaction. And if you or your organization and you as procurement professionals, if you lead a team of procurement professionals or buyers, and you give them the right skills, you give them and you assure that they have an awesome employee experience. So you're gonna have, and then your organization has manufacturing staff that are engaged, that are highly skilled, operating and executing those processes, and you as procurement professionals give them robust, high quality inputs at the right price point on time. There are no delays, there are virtually zero defects coming from your suppliers. Your customers are going to be utterly awed. You're going to have magnificent products, and you're going to have extraordinary customer experience. And this is going to yield what? Nothing but financial success of your organization. Nothing but, now you see how important you are, your jobs are as procurement professionals. However, if your suppliers are always late and they ship junk, as I say, junk is going to be processed even though your manufacturing processes may be robust. Junk that's processed is going to lead to what? Junk outputs, and your customers are going to be miserable. And the procurement folks, where do they get these inputs from? Where do they get these suppliers from? Now you see the impact. You're going to have miserable customers, and you as procurement professionals will be partially responsible for that degree of financial misery that will appear in red ink on your financial statements. That's one caveat. As the affair of protecting the organizations from risk, every risk factor that you as procurement professionals can identify in your environments, every risk factor has a cost. And this course equips you on how to articulate those impacts. Every risk element has a cost. And a caveat, a tool that could be used, and this is in one of our other courses. If you look at improving supply chain quality, you're going to come across failure mode and effect analysis. Right? So if another way of saying this, failure mode and effect analysis, if your suppliers fail to deliver the inputs at the right price points, at the right time, in the right quantities, I just explained what would happen, right? So if you as procurement professionals could identify all those potential risks, and you could document supplier A, supplier B, supplier C, etc. You could document how often those suppliers bring those risks to bear on your heads. How often? So, occurrence, degree of occurrence. And then you sit with your CFOs and your directors of manufacturing, and you said, well, if these risk elements are brought to bear, what is the impact on the organization and the customer? And you rate them on a scale of 0 to 10. And then you have this discussion with those folks. Well, what is our capability, our internal capability to detect that these risks are upon us? So occurrence, the degree of impact, and the cost of impact, and the magnitude of the impact, and the occurrence. So ability to detect, the occurrence, how often it occurs, and the severity or the impact of a particular risk being brought to bear. Each one scored on a scale of 1 to 10. And the formula for what you call a risk priority number is severity times occurrence times detection. So if your suppliers, and I've done this with suppliers, and I was able to draft the financial impact, negative impact down to the dollar, and articulate this to the company I was in, to the CFO. This course equipped me to articulate that, and the improving supplier quality, improving quality in the supply chain course also enhanced my capability on what you call FMEA. And I look at that at 21 suppliers, and I did this calculation: occurrence times detection times impact. And I had a risk priority number for all the suppliers. I had a couple of them that was 700. Then I had someone that was 500. And I gave them, had to give some of them working papers. Some of them I gave what you call a probationary period where they had to fix that RPN. And the ones, of course, that had a low risk priority, those provided the least financial impact. And I managed to get all of my suppliers under 100. Under 100 in some industries is considered as excellent. I think the automotive industry, I think they use this methodology. It has to be under 40 or something like that. Don't hold me verbatim on that, but the lower the better. So I give you two caveats: the balanced scorecard, field and mode and effect analysis, and how these could really help you do your jobs and manage risk, and to support operations, and to manage spend. And do I have any other questions? Because somehow I saw, so please forgive me if I wasn't able to get to some of them, because I'm seeing like a flash. There's probably something wrong with the system there. So it is difficult for me to read those questions. But I hope that you all had a good webinar today, and that you enjoyed it and there was some benefit from it. And we have webinars every week, so I hope that you all would continue to attend. And it's been an honor and a sincere and a profound honor for me to serve you today in this capacity. And thank you very much for attending. I'm going to stay online for a little bit. Thank you, Natalie. I hope you enjoyed it. Oh, thank you, Rodrigo. Thank you. Thank you. You're welcome. Oh, you intrigued? So shoot me an email, Perry. Shoot me an email. You know, I'm here. I'm here to serve you all. You're welcome, Jeff. I'm here to serve you all. You're welcome, Teresa. Oh, no problem, Jeff. If you want to collaborate further, let me know. My email is dmillington at nextlevelpurchasing.com. If you want to collaborate further, that's why I'm here. And I love it. I love serving you all. So I'm going to be here for a couple more minutes. If anybody needs me, has any questions, try the chat box. Maybe I get a little better cooperation there. Hello, Natalie. Oh, okay, I will tell him. I'll give him your best regards. And I'm trying to fill big shoes. I know. So I'm going to be in the classroom for a couple more minutes. I'm actually preparing an article on robotics in the supply chain environments and the impact. So please also look at our articles and check out our other courses. Oh, you're welcome, Abdullah. Were you able to get your, obviously you were able to get your audio situation fixed. I'm happy that you were able to partake in the webinar. Yeah, again, for those of you who are still there, please do some research on Altman Z-score. It could make your lives a lot easier and enable you to look at and detect all of those red flag suppliers. So this way you don't make the mistake of selecting suppliers that are financially burdened and financially stressed. So please protect yourselves and your organization from financial ruin by leveraging the financial the Altman Z score and the other auditing tools. Look at the income statements and their balance sheets and the cash flow statement. Because if those are showing negative posture, they're going to impact you eventually. And what a lot of suppliers may do is to come in at a low price point, and then they would start falling apart over time. Those price points would be compromised or fall apart over time. So do yourselves a favor and really audit well and audit continuously. And make your suppliers feel comfortable to let you know if they're going through some type of difficulty and collaborate with them. because there may be times where your organizations may go through some rocky roads and may have some difficulty. So I'm going to be here for a couple more minutes. Any other questions in here? Okay, so I hope you all have a great rest of the day and a great weekend. And again, it's been a pleasure and an honor to serve you, and I look forward to serving you the next time. A great day. Bye bye.